Eric here, Mr. Fired Up Wealth. Happy Friday to you. I got a quick video again here today. I want to show you the power of dividend growth investing, DGI. So you hear me talking a lot about it. It's not 100% my strategy, but it is my long-term strategy. I'm trying to get to 100% DGI through ETFs and individual stocks. Right now I'm playing the game of growth and flipping growth into DGI. With that said, I've always owned DGI stocks. Microsoft is one I bought. You can see here, April 10th, 2013, I bought 66 shares at $30.29. And then I bought another 100 shares at $30.17. So that's basically $5,000, 5,015 bucks, whatever. So $5,000, right, invested 6.5 years ago is now worth $31,900.12. Now, when you're in a brokerage and you look at your gains, you'll see a gain of 264%. But it's really misleading because obviously, some easy math will tell you that $5,000 times 300%, well, obviously that's not nearly $31,900. So how do you get to $31,900? Well, of course, it's from the dividends being reinvested. You can see here are all the dividends. Every one of these are dividends. So this is not, me buying it. This is just reinvesting dividends. So one share here, one share here, one share here, and it keeps going and going and going. And now I did buy 10 shares on November 20th, 2018, because I always said if it got under $100 that I'd buy more, and it got under $100, so I put in a small amount, $1,500. But basically, other than this $1,500, you can basically say $30,400. You got 30 grand off a $5,000 investment. That is exactly what DGI is all about. It takes time and some money. A $5,000 might seem like a lot of money, but you can do the same math with $1,000. You can do it with $2,000, whatever you have. The point being, if you let this invest and you've picked the right company, you pick a winner, and you reinvest the dividends and you have patience, and don't play the game of, oh, I'm up 100%, I'm going to sell. Did the story change? Why do you want to sell? Do you want to sell just to capture profit? Sometimes you do. But if you really believe in the company, like Microsoft, I don't see it going anywhere. Will it go down from the all-time high that we're at right now? Yeah, it's going to have corrections. But how is this company going to do over the next 5 years? Is it going anywhere? I mean, between Azure Cloud and Xbox and Microsoft Office and all the different things they have going for them, is it going to go anywhere? I don't think so. So what's this $31,900 going to be worth in another 6 years? The story changes, then you get out. But the point being, this is what DGI is all about, guys. You can see how compounding works. And this is only 6 years. So you think of like a Warren Buffett over the course of, 30, 40, 50 years. It's amazing if you think of it, even a 10-year run rate, if you pick the right company, this is the kind of results you're going to see. And this isn't even a top performer. There's some that are even better than this one. But it's one that everybody loves, and it's one of those success stories that if you pick the right stock today, you find a company that's going to perform even close to this. You're going to take $5,000 and you can turn it into $30,000 in 5 years. So anyway, that's the power of compounding and dividend growth investing. That's why it should be an important part of your strategy, and it works, guys. It really does. If you're in a taxable account, this is your bread and butter, because every time I sell something, I got to pay taxes. Now, I do, of course, have to pay taxes on these dividends, but they're qualified dividends, and I'm paying a lower rate on a qualified dividend. So every time I get a dividend, these little payments, this year, $100, $100. So big deal, right? You paid, $500. You paid taxes on $500 of reinvestment. It's not that much money, and over time, eventually, if I were to cash this right now, I've got a $23,136 gain that I'll be taxed on with a long-term capital gain. So depending on your tax bracket, either 15 or 20%. So I'm not selling anytime soon. Right now I'm actually in the 20% tax bracket. So maybe later on when I get closer to the F.I.R.E. retire stage, then I'll probably start selling some of these stocks and hopefully get that 15% tax rate. So anyway, guys, that's DGI in a nutshell. You can see how it works, and hopefully this video is kind of fun and kind of helpful. If you haven't subscribed, please do. I'm back, and I'm doing a couple of videos every week. I'm going to mix it up a little bit, do some screen shares, do some live recordings, do some in-depth analysis on a couple other companies that I'm looking at. But I'm 20% cash right now. I'm gearing up for kind of my next run for 2020. I think we'll see a 5%, maybe 10% pullback, but it might not be till March. But at some point, we're getting frothy, guys. And yeah, we've had a big run here. Could it go higher? Of course, but you always need to have some cash. So I'm still in the game. I got 80% in equities, but I do have some cash and some dry powder ready to kind of pounce on any movements. And even like yesterday, I added 150 shares of Cisco. When I see opportunities like that, I'll add, even if it's not an overall market correction. If something's down 7, 8, 9%, and I like the company and it pays a solid dividend, I'm going to be adding to my position. So I'll keep it posted as I make adjustments to my portfolio. Thanks for watching. Have a great rest of your day.